Hi, today we're gonna start with the basic concepts of taxation. Alright, so we're gonna start with basic concepts of taxation. What is meant by tax? So that is the cost you are paying to the government because you are living in a society. It's a cost of living in a society. This is levied by the government, that means charged by the government to meet the common welfare expenditure of the society. What does it mean? So we are using the roads, we are using the bridges, all are constructed by the government. How does government will get money to construct all this? By charging taxation. Alright. So now taxes are two types. One is direct tax, another one is indirect tax. Right. So one of the main and significant direct tax is income tax. So this is the tax which is charged on the income. If your income is more, you have to pay more tax. If your income is less, you have to pay less tax. And another one is indirect tax. Alright. So in indirect tax, GST, custom duty, etc. So these are all charged on the products and services you are producing or selling. But whereas in direct tax, that is the tax which is charged on your income or your wealth. What is the difference between income and wealth? Let's just say you are working and you're getting a salary. Salary is your income, but wealth, let's just say you have inherited from your father, from your grandfather, that is wealth. There is a difference between income and wealth. We will charge income tax both in income and as well as wealth. So that is direct tax. So in direct tax, burden of tax cannot be shifted. So if you are earning an income, then you have to pay income tax. You cannot shift your burden to somebody else, right? So why the taxes are levied? Well, we already discussed, because government needs a revenue. Why government needs a revenue? Because government needs to spend money on the common welfare, like building roads, schools, education, hospitals. Government needs money for that. So government gets money by charging taxes. Now, so who gave a power to government to charge taxes? Now that's what we're gonna discuss about. So power to the government given by the constitution. So there is a article 246 7th schedule will give the power to the central government and as well as the state government to make the laws regarding the tax. And also there is one more article in the constitution. No tax shall be levied or collected except by the authority of the law. Article 265 states that according to Article 265, no tax shall be levied or collected except by the authority of the law. Okay, let's discuss about the Article 246 more, right? So, in the Article 246, 7th schedule, it will give the power to the central government and state government to make the laws regarding the tax. So, there are in the 7th schedule, there are three lists are there. One is union list and state list and concurrent list. In union list, parliament has a power to make the laws. That means central government has a power to make the laws. In state list, legislature of any state, that means state government has a power to make a laws. And in concurrent list, both parliament and state legislature, that means both central government and state government can make laws. So in union list, only central government can make laws, and in state list, only state government can make laws. In concurrent list, both CG and SG can make laws, right? Now we are discussing specifically only income tax, right? So let's see. So this income tax is derived. We will get the power to charge income tax from the union list. from the union list, there is a entry number 82 of the union list in the list 1 of 7th schedule. 7th schedule. So in the union list, entry number 82, list 1 of 7th schedule will give the power to charge income tax. So here, income tax is the most significant direct tax. Entry 82 of the union list, that list 1 of the 7th schedule to article 246 of the Constitution of India, has given the power to the parliament to make laws on taxes other than agriculture income. So union list, that means central government has no power to charge tax on the agriculture income, right? Okay, so now income tax. So we are discussing about income tax. There is a Income Tax Act 1961. It came into effect in 1st April 1962, right? So these are the components of income tax. We have Income Tax Act 1961 and income tax rules of 1962. So here these rules are made by the Central Board of Direct Taxes, CBDT. Alright. Now in Income Tax Act 1961 deals with the levy of income tax. So what are the rates we have to charge and how to levy and everything deal by the income tax, and it contains rules. It's for the administration of the act. So they will form an act and they will form another rules for administration of this act, and then circulars are also issued by the CBDT if they get any doubts for the guidance of the officers, and the notification, and if they remove or add any clauses provisions, then they have to give a notification for the to give effect for that, right? Or amending rules, they have to give a notification. So these are the components of income tax law. One is Income Tax Act 1961, another one is Income Tax Act 1962, another one is circulars and notifications, right? Okay, now this is very important. Income tax is levied on the total income of the previous year of every person. So here you should know what is meant by total income they are talking about, and you should know what is meant by previous year and what is meant by person. These are the three things you should know now, right? So let's start discuss with this. What is this previous year? So previous year means it is the year which you earn income, right? So let's just say you have, this is the previous year, that means in 2019-20. So we know it always starts with April, the year starts with April. So 1/4/2019 to 31/3/2020, this is your previous year. In this year if you earn any money, any income, that will be taxed in the assessment year, in the next year 2020 and 21, right? So if your income is earned in the previous year, it will be taxable in the assessment year. Now let's see what is assessment year. So assessment year is a period of 12 months commencing from 1st April every year. So in the previous example, previous year is 2019 and 20, right? Okay, just go on. The previous year is 2019 and 20. Let me write that again. 2019 and 20 is the previous year. So here 1/4/2019 to 31/3/2020 is the previous year. So let's just say you earned money 10 lakhs, okay, and then it will be charged in the tax of the assessment year. So that is 1/4/2020 to 31/3/2021. So it will be 2020 to 21. So the money you earned in the previous year will be taxable in the assessment year. So here this assessment year should always be 12 months. Always 12 months. It should not be less than the 12 months. So it will always start 1st April every year, right? Now we're gonna discuss about the previous year now. So this should be always 12 months, but that means this may be less than 12 months. Previous year is maybe less than 12 months. So previous year need not be 12 months. It may be less than 12 months. So previous year, the definition is it is a financial year immediately preceding the assessment year. So the assessment year is 2020 and 21. So here they are saying immediately preceding the assessment year. Preceding means before. What is before 2020 and 21? 2019 and 20. So this is the financial year immediately preceding the assessment year. Right? Okay, now we are done with this and the previous year need not be 12 months. So we will explain this. Let's see the second example here. A chartered accountant set up his business on 1st July 2019. So he set up his business on 1st July. So that means he started earning money from 1st July 2019 only, right? And then when this year ends, when this 2019 ends, it will ends at 31/3/2020. So this is the previous year. How many months are there? July, August, September, October, November, December, January, February, March. 9 months are there. And it will be taxable in the 2020 and 21. It will start 1/4/2022, 31/3/2021. In this assessment year, this money, whatever the money earned by the chartered accountant will be taxable, right? Now, so here the previous year is only 9 months, right? So because he started earning only from July, so the previous year need not be 12 months. Okay, let's recap what we have learned now. Assessment year, it's a period of 12 months commencing from 1st April every year, and the previous year, it is a financial year immediately preceding the assessment year, and the previous year need not be 12 months, and income earned in the previous year, here income earned in the previous year is taxable in the assessment year. So whatever the money you have earned in the income year, it is taxable in the assessment year, right? Okay. Now let's discuss about person. So there are 7 persons totally: individual, HUF, company, firm, AOP, BOI. AOP means association of persons, BOI means body of individuals, local authority, artificial judicial person. Now individual, let's talk about individual. Let's discuss only individual now. Alright? Yeah. Sorry. Individual means natural persons, maybe male, female, sound mind, unsound mind, whoever it is. He should be a natural person. That's it. He will be considered as a natural person. Now, this natural person may be more than, sorry, just maybe below 60 years, and then 60 to 80 years, and then 80 and above. So if he is 60 to 80 years, then we will call him senior citizen, And then if it is 80 and above, then we will call him super senior citizen, right? Why do we need to distinguish like based on the age? Because the rates of tax slabs are different. Now, first thing, below 60 years. Below 60 years, if his total income is up to 2,50,000, up to 2,50,000 nil, and then 2,50,000 to 5 lakh will charge 5%, and then 5 lakh to 10 lakh will charge 20%. There is no 10% here. And then 10 lakh and above will charge 30%. So this is for the below 60 years. If it is 60 to 80 years, then up to 3 lakhs we don't charge anything, nil, right? And then 3 lakh to 5 lakh, same, remaining are all same, 20%. Sorry, remaining all are same, 5 lakh to 10 lakh, 20%, and then 10 lakh and above 30%. 10 lakh and above, if this is 10 lakh and above, is 30%. Now, if it is super senior citizen, then up to 5 lakhs we don't charge anything for him. Up to 5 lakhs, nil. Then 5 lakhs to 10 lakhs we will charge 20%, and then 10 lakh and above will charge 30%. So the same thing discussed in this here. So up to 2,50,000, if the total income does not exceed up to 2,50,000, the charge is nil. And if it is 2,50,000 to 5 lakh, 5% will be charged. And they mention 5% whatever the income exceeded. So how does that work? For example, his income is 5 lakh, right? Then we will deduct 2,50,000 in this, remaining 2,50,000 only we will charge into 5%, right? So that will come around 12,500. That will come 12,500. In the next, if the income is 5 lakhs to 10 lakh, then they will charge 20%. So 20% 5 lakh to 10 lakh difference is 5 lakh. 5 lakh into 20% you will get 1 lakh. 5 lakh into 20% you will get 1 lakh, right? And if the total income exceeds 10 lakh, then 30% they will charge. Let's see one example. If the total income of any person is 12 lakhs, then how much, and his age is 45, then the slabs applicable is this, right? Okay, so then how it will be charged? Up to 2,50,000 nil, and then 2,50,000 to 5 lakh we will charge 12,500, that is 5%, right? Take a calculator and 2,50,000 into 5%, you will get 12,500 into 5%, 12,500, right? Now 5 lakh to 10 lakh, 5 lakh to 10 lakh. So into, that means we need to charge 5 lakh into 20%, into 20%, right? Because only 5 lakhs is the difference. So if you do, you will get 1 lakh. And then 10 lakh and above is 30%. How much is 10 lakh and above? 2 lakhs. So 2 lakhs into 30%. How much you will get? 60,000. Now add all. So if you add all, 1 lakh 60, 172, 500. This is the tax we will charge on the total income. Total income is 12 lakh, and then we will charge on 1,72,500. Right? Okay. And the same way, if it is more than 60 and 60 to 80. And let me wipe this off. This slabs are applicable. The same slabs are applicable. I mean, if the below 60 years, what are the same slab applicable? The same applicable for the Hindu undivided family, HUF, AOP, BOI, and AGP. The slabs does not change for these people because there is no age for them, right? Only for individuals 60 to 80, 80 and above will be there. But for HUF and AGP and AOP, BOI, there is no age. So for all this, the same for all these and this, same slabs applicable. Same slabs applicable. And then for the company, there is a different slabs we will charge, and then firm, local authority will charge a different slabs. But apart from them, for all of them, this same charges applicable. So in the next class, we're going to learn what are the charges applicable for the company, and then what are the charges applicable for the firm, and what are the charges applicable for the local authority. Okay, thank you.